Holiday, this is what you're going to be writing in your notes this morning if you haven't already decided to do so. I'm prompting you to do it now. On the heels of any holiday that impacts trading normal hours, anytime that occurs, the very next trading session, the morning is very, very, very low probability, meaning that it can be choppy initially, or the entire morning session could be a wash, meaning that we may not get a clean entry. We may not get anything that makes any real technical sense to be a part of it, but it's beneficial for you to be observing it.
So I'm looking for, in my mind, a lower gap opening on Sunday. But because of, this is important to write this down, because CPI is the big event on Tuesday, it isn't really needed to see a big gap lower opening. It might be relatively close to where we closed on Friday, indicating what? When I see that, if I see that, then I think that Monday will be really quiet and we're going to be waiting for CPI. And that's a reasonable forecast. That's something that anybody technically would reasonably expect to see in price. And why? I just explained it. But now watch what happens. If we see a gap lower that's big, that creates a really good trading opportunity for Monday, even though the big event is on Tuesday. Why do I say that? Because the difference between where we closed on Friday and where we gap open on Sunday, if that's a large gap, on Monday morning, there will be a tendency for that market to want to rally up into the range that's created by the gap difference of Friday's closing price here and where we open.
I'm a Fed speaker. Anybody from the Fed is talking, it can create wild price action. And when you're new to trading, you don't understand that. So you have to make available allowances for you being inaccurate, or traditional expectations or rules go out the window when Fed gets involved. So the Fed effect is, all the rules go out the window, and you got to prepare for that. So the low I called this morning, and the high that I have here, when a Fed speaker or Fed representative is jawboning and talking, their words are going to be utilized as a smokescreen for price to do what it's going to do. But you're told it's the market reacting to what they're saying. And I'm sorry, I'm not a subscriber to that view.
When we're in a slow market is a market that is predisposed to have adversities because of the economic calendar. In plain terms, Fed Chairman Powell is going to talk tomorrow, Tuesday morning, and on Wednesday. Because of that, there's a lot of traders and money that's not being put to risk yet. It means they're not trying to speculate right now. Because of that, the market's going to have generally the tendency to create small ranges, small fluctuations in price action, and you want to be very nimble and not try to marry the idea of a market just blasting off and having 120 handles up or 120 handles down. The likelihood of a big move today is not likely. Whereas tomorrow, because of his testifying, that invites the opportunity for market makers to exaggerate price delivery. So we expect big movement tomorrow in the 10 o'clock hour. A lot of volatility in the 10 o'clock hour on Wednesday and on Tuesday.
Mondays, you should try to trade Mondays on a week like non-farm payroll. When there is no other holiday in the beginning of the week or prior to Wednesday, if there's a holiday in there, refrain from it. Expect more movement in the non-farm payroll event and Thursday ahead of it. Look what happened this week. That is a very specific characteristic of that calendar. If there's ever a holiday, if there's ever a holiday during the week, Wednesday, Tuesday, or Monday of non-farm payroll, Thursday and Friday of that week will be absolutely bonkers. It will be moving around really nice. You'll have a lot of movement. Therefore, you'll have lots of opportunity to go in and find something. especially on a lower time frame chart. There's plenty of setups to be able to do whatever you're looking for. When should you not trade Mondays? You don't want to trade Mondays on a normal non-farm payroll Friday. Or did I say that right? I just think I don't know. I can't go back because I'm talking to you live. You do want to trade Mondays on non-farm payroll Fridays when they're normal, without a holiday. You do want to trade on Monday and Tuesday and be done by Wednesday. But if there is a holiday, Monday, Tuesday, or Wednesday of non-farm payroll Fridays, you do not trade on a Monday. Look to trade Thursday and Friday after non-farm payroll release. So obviously, what fits good in that condition? Silver bullet, 10 o'clock to 11. You can do the macros that I'll talk about tomorrow. We're only going to teach the 9:50 to 10:10 and 10:50 to 11:10 macros tomorrow, and we'll ease into the other ones, okay? But any holiday that causes like a bank holiday, specifically with the dollar, I like to wait and see how the market digests the break, okay, or the lower volume that comes into the market just ahead of the holiday, or if there's a abbreviated trading session. I don't really look at that as noteworthy or pressing in terms of the analysis.
My lectures around FOMC. Okay, like we have FOMC minutes this week. That's not the same thing as a rate announcement. It's just the minutes. So it's not as impactful as when you do a rate announcement and a policy statement. At 2 o'clock, there's an initial run. And then at 2:30, it usually, not always, usually, it's going against whatever you saw going into the 2 o'clock run. So it's 2 stages. So it's a 2-stage delivery. So going into 2 o'clock and then 2 o'clock to 2:30, whatever you see there directionally, generally, you have about 70% likelihood that it's going to do the opposite direction, and it's going to be extremely much more exaggerated going the other direction. So it'll reverse and do the opposite direction and go the biggest move of the day will be opposed to what you saw going in at 2 o'clock as it traded to 2:30. And then when you do the conference portion of the Pal's like me. He must be watching my fucking live streams and videos because he likes to talk. And he's the longest winded Fed chairman that we've ever had that I can remember. And I prefer Bernanke, but everybody since Bernanke's they get under my skin. I don't like him. I didn't like Yellen, and I don't like Powell. But Powell, he's cut from the same cloth. He likes to talk and talk and talk and talk. But I think if he was a little bit less talkative at the 2:30 session, we'd have really better FOMC trades. Because sometimes he just likes to drag it out, and the more he talks, the more they have to wait to do their intervention. Sometimes you can just see they fed up with it. They say, okay, let's just start running it while he's talking. And it usually is them talking at the conference, the 2:30 portion of the FOMC announcement. Usually the 2:30, they'll say something or open the beginning of the discussion with, and that gives you all that you need for them to do whatever intervention they're going to do, which really, again, 70% of the time is just do the opposite of what just took place and hold on to it. Hold on to it to around 15 minutes after 3. And just, if you look and study that, don't take my word for it. Look and study and see that's the winner. That's the thing. But everybody likes to hold on to the close of the day, and you want to be getting out early on. So about 15 minutes after 3. Why? Because that starts your last hour macro.
So while I do say majority of the time Mondays should be left alone, when should you trade Mondays? Ooh, we're getting to the nitty gritty, are we? Well, if we have a news driver like non-farm payroll Friday, and we don't have a holiday, unlike this particular week here, we just celebrated the Independence Day in the United States this past Tuesday. And that can create rather lackluster events in the beginning of the month. In the beginning of the week. And that's why I said that the best trades will be on the latter end of this week, even though it's non-farm payroll. Usually the protocol that I teach my students to follow is non-farm payroll Fridays. You need to be done trading by Wednesday morning session. Take no new positions. If you're new, you do not do any new positions. Now, I teach don't trade on Mondays. That's not an every Monday thing. There's context that needs to be applied to that. Look at every single Monday. If there is no FOMC or non-farm payroll event in the latter portions of the week, look at every Monday as a consolidation day that sets up the weekly scenario for that weekly range. Usually Mondays will be treated like an Asian range. Okay, think about it like that in terms of Forex for a daily range. It's that quiet period where the market usually allows sentiment to build up, and that sentiment through the trading volume that comes in on Monday, then market makers will use that book to map out how they want to use the weekly range, then take them and run them against the, rig them across the coals. Now, there are some times where I might sit on my hands and not trade on a Monday, waiting for more information. And that Monday may become animated and actually present more opportunity than I expected. I may not have any plan of going in on that Monday, but it may change depending upon how we open up and how we traded. And I'll go in there at 10 o'clock to noon and do something. And if it really runs nice in the morning and it leaves some really clear, obvious liquidity, then I'll use that in the afternoon session, PM session, silver bullet, or I'll do the last hour of trading. But it doesn't mean I have to sit down every Monday and do it. So there's a lot of things that have to be weighed out. But I'm generally not trying to trade on a Monday because I want to see what the weekly range is going to do.
And tomorrow is the day before CPI on Tuesday. This is the day that the market's going to get wrecked. It's going to be a mess. So you want to be very, very careful and don't participate at all on Tuesday prior to CPI. Now, after CPI hits, there's nothing wrong with going after whatever remains in terms of liquidity or imbalances. But prior to, you don't want to do that. Okay, you don't want to do that at all. So be mindful of that for this week and the rest of the week calendar. I'll talk about that as we go via Twitter. But Monday's kind of light, and because it's ahead of CPI, our expectations are not terribly elevated because of the news driver that will be on Tuesday, which is usually a one-shot, right away, one-way street, just completely runs over top of the market. So just be careful with that. The manipulation is a timed event. You see it on the economic calendar. When there is no economic calendar event, then I heavily rely on macros. Macros are those 20-minute intervals, the first 10 minutes and the last 10 minutes of the hour that you're in, and then we start a new hour. It's the first 10 minutes. Every single trading hour is a macro. Hot damn! Did he just say that? Yes, I did. You awake? Well, they're boring you? You're awake now, aren't you? Holy shit, ICT's screaming again. It's audience management, folks. I got to get you awake. Every single, remember I told you I could trade every single 30-minute and 60-minute candle? Because there is a macro. That 20-minute interval is there on every single hour. Now, the ones that cause intermediate terms in market structure changing and turning are the ones at like 9:50 to 10:10 a.m., 10:50 to 11:10 a.m. Then you have 1:50 to 2:10 p.m. and you have 2:50 to 3:10 p.m. They are the ones that you should study them first.
Caution on a day prior to like news events like non-farm payroll, FOMC, and like tomorrow's CPI number. This type of price action is a classic delivery in price, where it's just a lot of hurry up, move something, move somewhere, and then chop around a little bit and drive you nuts because you just want to get out of the trade. You just want to get the trade to go to your target, be done, and be over with. Unfortunately, when you're trading ahead of high impact news drivers like CPI number tomorrow, non-farm payroll, FOMC, something to that effect, you'll get trading conditions like this, which makes it high resistance.
Mondays, we definitely look to trade if there is an event, like for instance, FOMC. FOMC tends to be a Wednesday, Thursday event. Not always, but generally. So that means you want to be trading on Mondays that week. Try to find something early on. Don't force it. Don't insist upon I have to trade Monday because ICT now said no. Be more willing to do so. But if there is a event like non-farm payroll and there's no holiday Monday, Tuesday, or Wednesday, we definitely trade Mondays. That absolutely is a thing. But we can't trade on Monday if we have a non-farm payroll event or FOMC and there's a holiday that week on a Monday, Tuesday, or Wednesday. You don't trade the Monday.
It's being Monday on a non-farm payroll week. It's the beginning of a new month, end of an old month, and that's a Monday that I would be trading. And the characteristic of that Monday is that it's going to be out the gate real quick, trying to get somewhere. Don't take my word for what I just said. Do not do that. I want you to go back and look at the markets that you trade. Look at the Monday of non-farm payroll. So non-farm payroll weeks on Monday, generally there's a lot of excitement right out the gate. 9 o'clock to 9:30, there's a lot of excitement. Lots of excitement. It's designed to be that way because it gets people excited about the whole week, because already people that are just warming up to the idea of trading, they hear about this myth, this legend of people making lots of money on non-farm payroll. It's big moves on non-farm payroll. NFP, baby, for life. And then they get out there and they wreck their ass. They go out there and they do their own ass in, and they don't ever want to touch a non-farm payroll ever again. But there's always, like PT Barnum said, there's a sucker born every second. There's someone coming in here buying into that bullshit that move on 8:30 on a Friday once a month is big, easy money. And it's a big, easy hole in the head is what it is. You're playing Russian roulette, especially if you don't know what you're doing. But while everybody else, while all the retail Joes, retail Ricks, all these average folks that just simply want to get out here and just plunk their money down with no logic behind it, want to gamble, all their attention is where? Friday. NFP, not for professionals. So if Friday's really not the professional day, when is the professional day or days? Monday and Tuesday. Now, when is Wednesday a factor for smart money to be using that up until 11 o'clock in the morning? If it's been consolidated on Tuesday, or it was a limp-wristed approach to delivery on Monday, wasn't a whole lot of excitement moving it around on Monday, then you roll into Tuesday expecting, okay, we're going to see some fireworks in opening bell or leading into opening bell on 9:30. Equities, Forex, everything's going to move around real nice. But if it doesn't do it on Tuesday, that means you're going to have a really fast and wild Wednesday morning session that will become choppy and uncertain right as we go into the lunch hour, New York lunch hour, after 11 o'clock on Wednesday.
If I suspect that the market's going to be problematic for me, meaning that it's either going to be very hard to read, and I'm expecting that because of some news driver that would come the next day or later in the afternoon, like FOMC, I will adopt the 7 o'clock to 8:30 time window if I want to trade pre-market. So before 8:30 news driver comes, if I see something that I want to participate in, and I think that the news driver at 8:30, what I mean by news driver, any kind of report data, some kind of market, medium impact or high impact news event that usually gets released around 8:30 New York local time. If I like
the market structure that's in play at 7 o'clock going into 8:30, I have no fear of getting in a trade and using the 8:30 hour to roll right into my targets.
The economic calendar, when there's an absence, oh yeah, that's right, you did say that shit. There's an absence of any medium or high impact news driver in the morning session, where they're predominantly usually released around 8:30, sometimes 10 o'clock hour, like you had the 10:30, you had the crude oil inventory number. That is generally that morning time of day is where all the reports come out, and predominantly it's mostly given at the 8:30 Eastern time. But we had none of that today. But at 1 o'clock Eastern time, we had the bond auction. So in my mind, what I like to do is I like to sit still and wait for them to get everything all set up for that bond auction to release at 1 o'clock. Now, you can look at the economic calendar, and you can use what I'm showing you here today. Every single time they do a bond auction, if there's a day where there's no morning data, this is important now, because sometimes you'll have a bond auction, but there'll be morning news drivers. That doesn't hold true for this. Okay, this is a condition, this is a setup, and a part of determining the narrative where it's just a clean shot, and you can just really anticipate it panning out, and you can trust everything I've taught before in terms of entry mechanisms, fair value gap entries, bearish breakers, or bearish order blocks, and or immediate rebounds. Away from it, yes. But we're going into the time. What time? 8:30. But there's no news coming out at 8:30, Michael. It doesn't fucking matter, because 8:30 is when the algorithm's going to do it. It doesn't matter if there's no news there. Doesn't matter if your economic calendar says there's a medium impact news driver or a low impact news driver or a high impact news driver. It's going to start running based on that time of day. Sometimes when you look at the economic calendar, there is an absence of any significant medium or high impact news events. And what do I mean by that? If you go to like forexfactory.com or Econoday, they give a really good breakdown of every single calendar day and what time specific market drivers come out. That means a speech, a market data release, like a report. Think like PMI, CPI, those types of things. When we have a day there that has an absence of any news drivers in the morning, that tends to be a rather lackluster, rangy type, false breakout, and then pull back down into the previous day's range type of day, or reverse it if it's trying to move higher.